Welcome everybody, it's Mike Smith here from Hawkeye Options. Delighted you could make it today to have a look at our trading tip. As we see, we've got the SPY in front of us, the most liquid option on the market, and quite simply it's the ETF that follows the S&P 500. You'll see, as with the index as a whole, we've dropped from uptrend back into congestion on the daily chart with selling volume coming in. We actually finished at our low of the session yesterday, and looking at the futures, it's not likely to get any better, and so we are expecting a little bit of a move down, certainly on open. Two-day chart and weekly chart still in uptrend, with still buying volume yet to show selling volume on here. So this is really a very mixed picture we see here. There's very few tailwinds that we're seeing at the moment that's going to help it re-challenge this pivot high just above 212 there. So what we're thinking with this is a butterfly trade, quite simply because it is, although a three-legged strategy, then with it being the most liquid option series on the market, we're looking for a June 24 expiry, so 10 days from now, and looking perhaps at, if we look technically at where to place our legs, well, certainly there's a series of pivot lows around about that 205 measure. We did have a pivot low below that, but you'll notice we sort of closed back up towards the top of the bar on that reversal. So we're looking at perhaps a 205 as the lower point, 211 as the top point. We see 210 was a key level. We did close over that for two sessions, but really without any conviction. And we look at the longer term, and you'll see how 210 is a key, or a more key level, as you'll see back here towards the back end of last year as well. So we're quite happy to place a 205 and 211 as our two bought call legs, and of course we go in the middle with a butterfly with our sold call legs. So perhaps a 208 being $3 in between the strikes. That's a classic butterfly setup. Whether we go calls or puts at around about the same price, around about 75 cents for this as a trading idea, with a potential very healthy return of up to $3 if it closed right on 208. Our feeling is with this that we may be best placed doing a put version of this, so it would be buying the 211 put, buying the 205 put, and selling the 208 put as the trade setup. Although there's nothing wrong with going calls as well. With the 2-day and the weekly still in uptrend, we could see a retest at this high. So really we'll be looking at this probably half an hour to an hour in market. Just let those spreads come in a little bit, and then we'll trade it from there. And that's just one of the trades I'm considering for today. So before we go, if you'd like to see everything I'm considering and see the trades I'm really taking, why not take a trial to my Options Elite alert and trading service? That way, you can see exactly how I find the best trades that can produce the largest returns whilst keeping the risk low. Just click on the link below and get started today. You'll be glad you did. See you soon.